Many called it the backbone of Silicon Valley.
Silicon Valley Bank.
SVB. Silicon Valley Bank.
SVB, with $175 billion in deposits.
Second largest bank.
Collapse since the 2008 financial crisis.
A heart-stopping moment of this bank is done.
You've likely seen the headlines, you've heard the news, and if you were a member in our Discord, you actually heard about this before it hit the mainstream news. And I've seen the coverage. Some of it got it right, some of it got it wrong, but it's time for the no BS take. I'm gonna tell you what happened, what it means for the greater market, and what's next. The simplest and quickest explanation of what happened with Silicon Valley Bank is that interest rates rose faster and higher than they were anticipating, and this exposed weaknesses within their books where they were using long-term investments to cover short-term loans. In the age of technology where it's at today with all the AI that we have, this was 100% avoidable. The management at this bank, including its board of directors, are totally to blame for everything that's occurred. But we also need to point a finger at the Federal Reserve and regulators who told us that the banking system had no risks with the raising interest rates, which shows us the multiple levels of incompetence that led to this bank's collapse. This is a Seeking Alpha article from December 19th, 2022. Pointing out the issues at SVB and how they were at risk. Yet we heard Jerome Powell not just 30 days ago say that the banking system was fine. We had Yellen come out. She said, oh, everything's peachy. We're keeping a close eye on it. And yet we still expect that the Federal Reserve is going to safely land the economy. Nope, we've already seen that that is not true. And the big discussion now is what happens next. Now, lots of people don't want the bank to be bailed out. They don't want another '08 situation where these banks screw everything up and then get away scot-free. But here is the major issue. As you've probably already heard, many people call this bank
Backbone of Silicon Valley.
And the people who work with this bank, the depositors, the startups, the people who are building new businesses to make better things for us, are the ones who are the victims, and they did nothing wrong. They worked with a top 20 bank. They went to number 11, who helped a bunch of startups who they were told was working closely with regulators and following all the rules. They were trying to start new jobs. They were trying to treat their employees right. They were trying to build things better and provide a service to the people, and letting them fail because of this bank's mistakes, making sure that they don't get their money because you want to punish a few guys at the top, is not worth it. All right, we're going to be falling behind to competitors like China too. It's very important that we support these businesses. And I know I've heard all the rebuttals, and some of you in the Discord have even been arguing with me on this point, saying that us continuing to bail these people out when they make huge mistakes continues to breed more incompetence and gives this aura of, well, you can do whatever you want, get away with it, and daddy government will come clean everything up. And look, I totally get it. You are right. But at the end of the day, the blame really goes on the regulators who are supposed to be keeping an eye on these banks and making sure they didn't make huge mistakes like this, that they were actually protecting the people. And they, despite telling us they were, didn't. Which is why I think the best path from here is for us to make sure we save those depositors, we make sure they get their money back as fast as possible. Because remember, as soon as Monday hits, already people are not going to get paid. Maybe some of these startups have money of their own. They can start paying their employees with that money, but a lot of them don't. They rely on the bank to make those transactions possible. And the only way to really make this doable is for the bank to move these depositors over to another bank and give them the financial assurances they need to make sure that those depositors get their money, and as fast as possible. The longer they wait, the more damage that's done, and some of it will be irreversible. And remember, we're not just talking about a handful of startups. We're talking about 44%, almost half of the tech and healthcare startups are funded by Silicon Valley Bank in some way, fashion, or form. And if you're just worried about the stock market, keep in mind that these real issues in the economy will definitely be reflected in the stock market. We're talking about tons of listed companies that have money with SVB, and the longer the government doesn't act, the more damage that's been done. Back in 2008, the TARP program was going to be used to bail out the banks and provide that financial security. The first time it went up for a vote, it was actually turned down, and subsequently, the market bled 9% in one day. And so I know lots of people are likely going to want to be hesitant to make a move to say bail them out, but the longer you wait, the more damage that's done and the more it's going to cost us in the end. Now, so far, as of now, we have heard word that they will have an emergency meeting on March 13th, that's Monday, to discuss what to do next. But I've got to say, this is too slow, and what we're seeing already occur is a bank run, and not just with Silicon Valley Bank, with other small regional banks. Everyone's going to their banks right right now and saying, I want my money right now. I'm worried about what happened to them. Could this happen to you? And they're taking that money and they're going to one of the top banks, someone like JP Morgan, someone that's deemed too big to fail. And what this panic does is causes tons of stress to the system. What we should have already seen occur was Biden, Yellen, Powell, someone say, we will back and protect these depositors with more than just the FDIC insured 250K. That's nothing. All right. These companies are out millions. We're talking 10, 20, 30, 40 million dollars. We're talking about 150 billion in unsecured loans. All that money gone. But hear me out here, because this is important. Even if they back these depositors, it is not the end of issues. Not only am I completely unconvinced that this was the only bank that was having issues and showing some warning signs, but the printing of money and the bailout will also bring back fears of inflation coming back with a whole new sense of vigor. And these fears could spark a big sell-off, which is already even showing in the technicals on the S&P. We can see on the year-long chart a very classic wedge setup with the market selling into it on big volume. If we go to the monthly chart, we can see what looks like a very classic flag development signaling big downside coming in the future as well. This could be the sell-off that I've been talking about for quite some time now. Now, let's say things get really bad. The Fed decides that it's time to pivot, to do some monetary easing. They decide to support the market. Let's look at how that historically goes. And this is actually another video that I've already done. I've already covered this. We've talked about this a lot. When the Fed actually starts to loosen, starts to ease, that's when the selling begins, because then people start to realize, oh, the economy can no longer support tight monetary conditions. That means it is weak. That means there is fear. And then that is what causes the actual sell-off, the actual lows. Okay, we have 3 rate cuts here in a panic. And still after that is when the actual bottom hits in the market. Remember this. It's going to be very important. Now, remember, all this is supposed to be for education. Nothing I say is supposed to be taken as financial advice, but one of the things that I've already been doing is getting short in this market. It's been very successful, and I will be getting more short as we continue to see this play out. Now, this doesn't mean that Monday is going to be the beginning of the end of everything. And in fact, I think that if we do hit a new bottom on all this news, it'll be the start of a new super cycle bull rally. It'll be crazy. I think with all the issues in the bank, this actually gives a ton of credence to crypto. I think this should put a spotlight on Bitcoin. So if these lows come in, I'm going to see them as massive buying opportunities. At the center of my core, what powers me is a permabull. I am permanently bullish, all right? Even if I'm short-term bearish, even if I'm shorting stocks because of the technicals I see or the issues I see, long-term, 5 years, 10 years, I think things get better over time, and I love to go on shopping sprees. So remember, if you want to know what my live commentary is, you can always join the Discord. I share all my trades in there. I post all my commentary, what I'm thinking, what I'm watching, what information I think is important. It's all in there for you to look at. So go ahead, like the video, subscribe to the channel, ring that bell, because if there's any major changes in this story, I will go ahead and make YouTube shorts about it to make sure you get the information as fast as possible.